Traders Hub. Over the past few days, we've witnessed very significant data releases, very significant comments coming in from the Bank of Japan and also the Fed. So today, I'm going to share with you a couple of those events that happened and how they should be a source of forward guidance for you going forward as a trader. Because I feel we've gotten to an inflection point. Whatever stance we had taken before may be assuming yet another dimension. So we're going to begin with the Bank of Japan. In our previous video, monetary policy meeting, that we expected scenarios. Either the BOJ leaves interest rates unchanged, that means they're going to stick to their ultra loose policy that they have kept for decades, or they decide to increase interest rates. So we actually analyze those scenarios and what they would imply to the pairs that involved the JPY. Those were exactly what we did during the course of our last presentation. And also we went ahead to analyze the Fed stance, but sticking to BOJ at the moment. The keynote address was delivered by the central bank chief, and guess what? It ended up in a rate hike. 15 BPS was actually the value, and it was up from about 0.10. So currently there is an interest rate hike of 15 basic points by the Bank of Japan. And what actually happened after the release of that data saw the US JPY crashed further to about 152 bucks, and also you had the JPY crashing down to 193. You also had the CHF JPY crashing, as well as CAD JPY was the biggest loser of the day, which fell to about 108.50. That's exactly what happened. And what do you expect at the moment? Remember, our stance has always been, when there is an increase in interest rates, the value of that local currency goes up, and vice versa. So for that of the yen, there has been an increase in interest rates, and just like I said, the Japanese yen had strengthened. And when you look at the correlation with other pairs, you see that while other bankers are trying to reduce interest rates, Japanese authorities are beginning to hike interest rates. So you're going to expect the JPY to begin to strengthen a bit, while the other correlating pair would weaken, just like you have experienced in the last couple of days. So Japanese yen beginning to strengthen. We still expect it to strengthen further. USD JPY should weaken. It's currently at 149. We still expect to weaken further because there has been this divergence. It has been there. The divergence between both central banks have been there for long. The BOJ, for the most part, have been accommodative in their interest rate monetary policy, while the Fed since 2022 have been hawkish. They've been tightening their monetary policy, and you saw that the USD strengthened against the JPY. The JPY now beginning to increase interest rates, while currently it's expected that the Fed in the US will reduce interest rate. That's for JPY. Now let's go to the Fed and the USD. You know, we always talk about the USD because we all know that the USD is the world's reserve currency. That's why it's actually very popular, because it's traded everywhere in the world, and so many countries hold on to USD as a reserve currency. That's to tell you how important USD is, and how important is the USD to every other correlating pair, and how important is the Fed, because the Fed is the central bank that actually manages the monetary policy that affects the USD. So what has happened with the USD lately? The Fed, in its policy monetary policy meeting yesterday, stated that they had witnessed signs of cooling inflation, and we should expect rate cuts. So at the end of that information yesterday, you saw USD weakening across board. Gold surged from 2423 to about 2452. We saw USD JPY crashing. Remember, just like I talked about USD and JPY, USD JPY crashed down to 149. Every other correlating pairs with the USD was affected. So going forward, medium to small term, you want to expect the USD to weaken. So that's exactly what we have for you today. If the Fed goes ahead to cut interest rates as planned, then you may actually find the USD weaken further. Even going back to our Forex factory, I think we still have a couple of very important data, and that data will reinforce Fed's stance, reinforce the decision of the Fed to expect, to deliver more rate cuts this year. If the non-farm payroll data that is going to be released on Friday turns out in the red, yes, if we get less than 175k jobs or thereabout, then you're going to expect that the USD would weaken across board. So that's exactly what you really need to know for now. So do well to follow us, like our page, and we're always going to keep you posted. Until then, have a great day. Bye.